Hey guys, this is a short segment here on the Time Compass new format that we've got going on. We're going to be focused on the silver bull rush as well as the metals. And we've got an expert here with us, Mr. Clem Chambers.
You can call me Ken, if
And
you like. People often do.
Clem Chambers, founder of retail investing platform, a new market commentator, financial author, and longtime columnist for Forbes and Seeking Alpha. Welcome to the show. And if you would, please give us a short introduction of yourself for a couple minutes. Tell us when you got into silver and trading.
It's a very long story. When I got into trading, I was about 8 because my father was a big commodity trader in the 70s. And he had a little earpiece put on his telephone that I could pick up and listen to it like that, and listen to the rings and
Right.
listen to the brokers talk and all that good stuff. So that's kind of when I started. And I bought my first gold mine about that time, not the actual mine itself, that came later. But I bought shares in an Australian mine called Metromine Minerals. And I saw somebody promoting that 40 years later. And I wrote to the CEO, I said, look, come on. I was 8 years old. I bought your stock, and now you're telling me you're going to make a great gold mine, and I'm now nearly 60. What, come on, pull the other one that's got bells on it. And he wrote me back and he said, yeah, no, it was a great mine then. It was 1 ounce a ton, and now it's grams a ton. It's still really good, but the time's moved on, and we can go back over the old stuff, and it's really good. And it's really great. And I thought, go on then, okay, top marks for you there. And so that's when I started. And I saw all the commodity madness of the 70s, this is what this is again. That's why I recognize it. So, and then at 2000, I started a financial website, and I've started a new one recently called a new FN, which is free real time UK stock prices in level 2, and also free real time precious metal prices. So real time, not delayed, and free real time Forex prices, not delayed. And all you've got to go in is promise, I'm not a professional. I'm not a professional, honest governor. And you can have it free. It's all free. So anyway, that's what I'm doing. But I used to write for Wired magazine back in the dot-com boom. And then money became unfashionable when it crashed. And they said, we don't need a money section anymore. And then I started writing for Forbes. And I've been writing for Forbes so long that my contract is in Latin. And I'm still writing for them. And I've got a Substack, which is very popular. And I've got a YouTube channel, Clem James Alpha, which is really popular. Well, I rant all like this a lot. And so that's me. And I'm a chemist these days, and I'm in rare earth, working with a big university in England with some proprietary technology for getting rare earth out of all sorts of things.
Oh, that's fantastic. Since we're already on the topic, maybe you're familiar with Elon Musk, and he did something in Nevada for extracting, I think, lithium out of the
Yeah,
out
well,
of.
lithium's a different kind of metal. Lithium is more about, well, not more, is about batteries. And of course,
Mhm.
energy storage is a big, hairy deal. I mean, I don't know if anybody saw the dancing Chinese kung fu thing that came out a day or two ago. And I was looking at it, and I was going, well, thank God they can't charge them on the battlefield. Yeah, because that's the key thing. It's like, it's no good having the Terminator, but he runs out of batteries every 20 minutes. I mean, thank goodness for that. Let me just go back let me just go back and plug myself in for half an hour.
Yep, there you go.
You can do it in the factory, but you can't really do that on the battlefield, thank goodness, so far. But obviously, you can always do a hybrid. You can always have a petrol fuel. So anyway, lithium is about power storage, and power storage is a big, hairy deal because before the AI thing came up, it was all about renewables. Okay, and renewables, they tend to not run full time. Wind blows in the afternoon, windmills work in the afternoon. Certainly in Europe, that's how it works. But then what? Okay, you've got plenty of electricity in the afternoon when nobody wants it. And then what? Well, you would like to store it, but storing it in gigantic batteries would store, 100 megawatts of electricity. So I can capture all my windmills and let it out at night when you need it. Well, you're going to need lithium for that. That is
Mhm.
the state of the art right now.
But yeah, they definitely have a new patent out, and they're mining it or harvesting it where they hadn't been able to before. But
Yeah.
let's not
Go
get
on.
too off of topic here. But I just thought that was interesting that you're a chemist, and we can talk about that another time. So
Well,
look,
I'm an
I think
entrepreneurial chemist rather than a man with test tubes.
gotcha, fantastic. So I'm gonna say that let's keep things simple on today's talk, and let's really speak to the people who might not be into gold and silver right now and are thinking about dipping their toes into it. So gold and silver bugs have been calling for this bull run for the last 30 years, saying it's going to happen anytime now, anytime now, anytime now. And finally it's happened. Is it too late for somebody new to gold and silver who doesn't have a giant room full of coins and etc.? Is it too late for them to get in, or are we just getting started?
I have a law. This is my law number 89, which is if you have to ask, the answer is no. So if you came up to me and you said, "Oh, is it the right time to buy whatever it is, Nvidia, a cheap stock that looks really, really good, any of them? Should I buy that?" The answer is no. If you have to ask, the answer is always no. Right? If you know, then you should. If you don't know, you shouldn't. That is kind of the rule of the market, because when things don't go to plan, which they won't go to plan because no one can really read the market that well, you'll start to go, "Oh, did I do the right thing? Oh," right? And then you'll probably get out and then you'll regret it and then it'll be a painful experience. So you should only ever really, in any market, in anything at all, ever, ever buy when you know. Right? And you go, yeah, it's no brainer. I mean, why wouldn't I? Oh, God. Then you should. But if you go, oh, I'm not just sure, is it? No, just no. Yeah. Your fear, which everybody turns their nose up at, well, you can give that all to me and I'll give you a box of rocks for sure. A box of rocks. Fear, it's great stuff. It's wonderful. It's wonderful. Yeah, it goes down in value slowly. Yeah, things go up in price quickly and all that kind of stuff. But it's what you work for. It's what you save. It's about turning that into assets. And if you know an asset is good, you should buy it if you can. If you don't know it's good, you shouldn't. Right now, as far as precious metals go, it is late in the cycle now, very, very late. And therefore, you should think, why do I want to buy silver and gold? Now, if you say it's because I know it's the end of the world, it's the global apocalypse, and the only thing you need is gold, and you're sure of it, then fine, go ahead. You might be right. But if you're not sure, then you shouldn't. Okay. Now, imagine that you said, well, I'm absolutely sure I need gold and silver as part of a diversified portfolio of risk, which means a bunch of assets and money markets, ETFs of the index, blah, 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 a little bit of Nvidia, a little bit of Exxon and all that. Yeah. You should probably be thinking about having 2.5 to 5% of your money in precious metals. Now, the way you do that is you don't go, oh, well, here's snap, bang, wallet, crunch. You should do what's called DCA, dollar cost averaging. And what you go, you say, well, I'm going to I'm going to save. And 2.5% or 5% of my savings, I'm going to put into silver or gold, one way or the other. Now, you can do that by going down the coin shop and paying too much and then putting it in a sock and then hope no one robs you. Or you can do that by buying an ETF on the stock market, a physical gold ETF, which is a sensible way of going. Or you can go, right, I want a bit more spicy. I'm going to buy a gold mine. I'm going to buy a big gold mine. And you can go up the curve of spicy until you say, I'm going to put that money into some crazy little mine in Canada that say they've got the gold and nobody's sure. Right. So that's how you can spread your money, but you dollar cost average. So you go, right, I'm going to save $1,000 a month. $25 of that's going to go into gold or silver. Oh, gold and silver. Oh, gold, silver, platinum, palladium. And I'm just going to let it every quarter. I'm going to buy $100 worth of a physical precious metal ETF because my Robinhood will let me do that for nothing. That's fair. You should do that. And should do that. Should do that. Should do that. Yesterday, just so everybody knows, I sold my physical gold, all my physical gold. And how I got into it was I DCA'd into it and I tripled my money there. And it was never a pain. It was never a risk. I never started sweating it. The only time I started sweating it was when I was looking at the number going, I did really well there. I wasn't sure how well I'd done, but I'm triple, roughly. And I thought, I'll take that bit off the table. Of my 3 parts of gold, ETF, mines, and physical, I'll snap a third off. Goodbye. And I will de-risk it, lower my risk. It's not about whether gold's going up or down. It's whether my risk is going up. So I've now lowered my risk. And I can look at that money. Tomorrow, I could buy gold with it. Like I could buy a gold mine with it. I could buy an ETF with it. I could buy some more physical. I could buy platinum or palladium. I could buy silver. Will I? Probably not. Yeah. The other thing about investments you should always think about, and this is something which I don't follow this, but it's a good way of basing yourself, earthing your thinking. If I sold this asset now, would I buy it back? Let's just say your broker accidentally sold it. It was a glitch. All your
Mm.
NVIDIA got sold. Yeah, or whatever it is you've got. All your Tesla, it's gone, it's cash. It's a pile of cash there. And no Tesla anymore. Would you go, stupid broker, and buy it back? Or would you go, I quite like it as cash over there. Yeah.
Mm.
Because if it was cash, not the thing, and you wouldn't buy it back, why do you hold it?
Mm.
Yeah. So that's a good way of grinding yourself, or not grinding, probably. The markets will do that to you. Having yourself grounded is to imagine, if I
Right.
sold this, would I buy back? You can always buy back. It cost you a little bit of money to do it, but not really. I mean, in America particularly, the spreads are so tight and the cost of trading is so low, you could sell and buy back in the same day and it wouldn't cost you too much. It's a good thought process. Start off, should I buy gold? No. I'm going to buy gold because I know it's a good investment. Go ahead. How do I do that? Well, if you don't know how to do it, the best way for you to do is buy an ETF. Physical gold ETF, buy the big one, buy the big name, whatever it is, iShares, BlackRock, or whatever the one is. Yeah, buy that, and then dollar cost average in. Don't go all in. It doesn't matter what you do. If you go all in on anything, you will always lose everything at some
Mm.
point. Yeah,
Right.
it's like, imagine you've got this roulette wheel, and it's 31 reds and 1 black. Okay, so if you go there and you put all your money on the red, you're probably going to be okay at first. But at some point, you're putting it all on the red, double, 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 all on the red, all on the red, all on the black, gone, all gone. You lost everything.
Mm-hmm.
There's no way back. Have to adjust your positions, how much you should make, and what the chances. Yeah. And it's actually called the Kelly criteria for anybody that wants to find out about it. And gamblers use it when they gamble on things like horses. Yeah. It's what is your optimal bet size so that you can optimally make as much money as possible over time without risking getting killed by what's called overbetting. I put it all on the black each time, but there's always the chance of the red coming up. And when it comes up, you're out and you're never coming back. So with that roulette table, you can put pretty much all your money on actually, but not all of it. Because when it comes up red, you're starting again from a lower point. So there's a mathematical formula for that. P-1 for anybody who cares. So that's why you diversify your exposure to risk and reward. Yeah, diversify portfolio of risk. Always hold that in your mind. Have a diversified portfolio of risk. Now, classically, that should be 2.5% in precious metals. So, you've got a net value. I don't know. You're a billionaire. No, you've got whatever, 10,000. Or 2.5% of that is 250, isn't it? Yeah, you've got 100,000, 2,500. If you've got 1,000,000, 25,000. Yeah, that is the no-brainer. And by the way, you got 1,000,000, and just say suddenly gold became the worst thing ever. Yeah, and nobody wanted it. Oh, you lost 25 grand out of 1,000,000. You're not crying, are you? You go, that was weird.
Right. Right.
That was weird. And that 10 grand of potatoes I bought, they've gone through the roof. And everything's smooth and happy, and I don't need to stress about it. And I don't need to sit and watch the pixel go up and down. Oh, I'm making money. Oh, I'm losing it. Oh, no. You don't need to do that. You need to sit back, relax, and get a good return. The more risk you take on, more reward you reach this cliff. You lose it all. And that's where you don't actually lose it all. You go up that curve of risk and you make more and more and more, and then it tops out. And more risk you take, you start to go back down the other side. The risk only equals reward up to a certain cutoff point, and then it starts to be more and more dangerous and more likely that you will lose all your money. The classic way to yourself in financially is leverage. To take on leverage. Oh, I got 4 times leverage. I've got $1,000 here. I can take $4,000. Oh, I've lost it all.
Right. Yep. A little bit of a dip, 25% dip, even for half a second, you're going to margin your account. Bye-bye.
Yeah, and of course, there are certain places which will do it to you on purpose. I mean,
Yeah, for sure.
in crypto, that's exactly what they do in all these dodgy tokens. So they go, they bring out this token at a bazillion or a trillion, which is all fake. right? And you go, that's going to go down. So you go short, and then they spike you out, and they make it all. And because they control the price, because they control all the order book and all the flow. They used to do it in equities. They used to do it. Could probably still do it occasionally. Yeah, all that's totally illegal in equities, because they control the price, and you're on margin. Oh, you're gone. All that money is yours. What you have to always look out for in financial services are companies.
Hi, I'm Bud Leiser, host of the Time Compass Show. As an SMB leader, do you feel that recruiting drags on, salaries keep rising, and your team is already stretched thin? And what if your best employee quit today? You need a backup plan, my friend. Your local talent is scarce, and those costs keep rising. Did you try outsourcing and remote staffing before, and it didn't work? That's because they promised you associate level talent, but secretly hire fresh graduates and sold them to learn on your dime. But not with us. We specialize in staffing professionals with over 5 years of real industry experience. Think about it. No more juniors means no more babysitting for you. Less time onboarding, less time training, and faster team integration. Imagine no additional tax forms, insurance forms, and labor compliance with your next hires. And did you know that staffing with us can save you 30% just on federal taxes and employee benefits? So what are you waiting for? Are you ready to start saving time and money? Then schedule a call today and let's become your top choice for top global talent. Just go to budleiser.com and click outsource. That's BUDLEISER.com.
Financial services are companies, outfits, situations where they pump your money from your pocket into theirs. You see that? Run away. Yeah. And one of the giveaways, one of the things to make you always nervous, if anybody talks in percentages, be very worried, be very scared, because
Okay.
all the scams are in percentages. Will you do this? I'll only charge you 3%. No, I'll only charge you $27. Well, what's with the 3%? Oh, that means we make a lot if you have a lot. Oh, why is that right? Why should it cost me more to sell this than that? Dynamic pricing, oh, hello. That means you're I was going to use a rude word there. That means they're going to you because of who you are. So always be worried about anybody talking in percentages. It's always a small red flag, not a big one, but a little one. Government,
I've
hey,
never
you are
heard that
taxed
before. That's cool.
$27,000. Now let's call it a percentage, shall we? So you don't really know how much that is.
Is that why the government always taxes us in percentages?
Yeah, for sure. For sure. I mean, clarity, transparency, people don't like that when they're the one doing the taking, right?
Yeah, for sure. So listen, I'll share some of my investment thesis right now, and then you can share some of yours and we can see where they're lining up. I've moved my investments from the metals, COPEX, silver, ETFs, and I'm focusing now on the equities inside of the companies, miners and explorers, because even if the silver price and the gold price stays the same or even comes back down a little bit, I think there's a lot of room for these companies to re-rate. When they are all in, sustainable cost was $20 an ounce and they were selling it for 25, they were only making $5 an ounce. Now, whether today's price is 75, 100, or 125, they're still going to re-rate themselves at a much higher multiple, and we should see the price go up. What do you think?
Okay, so there's one or two issues there.
Hmm.
Markets are very good at taking all available news and getting it into the price. So what you just said should already be in the price. If it's not, it's for two reasons. One, the market's asleep, and it can be asleep because something weird happens and it goes, oh, I don't know what. So there is often a lag. Okay. There really shouldn't be a lag in those prices right now. However, if the market's not sure whether it's coming down or not, it will price that into these assets in a way whereby if it does, if the future is what you're saying, it will be quite good. It's going, I'm not sure whether it's going up or down. And if it's not, if it's 50-50, then rather than be 100, this mine should be 80. You see what I'm saying? So it
Mhm.
will look at that as the price has a much more impact on that. So if there's a chance of it falling a fair bit, that impact will be baked into the price. And as that fall vanishes, as the possibility of that fall starts to diminish, so the price will rise. So it's the uncertainty of where the price is going that would suppress the price of the miners. And as that uncertainty goes away, so they should go up. So if you look at silver now, which is went through the roof, pulled well back, way back to 70 odd, whatever it is, and now it's going to go like that. That volatility will suppress silver mines. Yeah, the moment it starts to do that, and it starts to seem like it's going to live at the new price, the miners will go up because the certainty of where the price of silver will be will vanish. Does that make sense to you?
Sure,
Yeah.
sure.
So it's what is unknown that isn't in the price. Yeah. Or you could look at it the other way around. It's all about what is known and what isn't known, and also how far out the market looks. The market is looking out a year. It's not what happens tomorrow. It doesn't care about tomorrow. It's already worked out what's going to happen tomorrow, and probably what's going to happen next week, and probably what's going to happen next month. But then it starts to get a bit vague, yeah? And the market stops caring about where things are going to be after a year. It just doesn't care. It just, I don't know what's going to go on. I can't put that into the price. It will put into the price that anything up beyond a year is unknown. So if you can see out a year, if you want to know what's going on, look out a year to what you think is going to happen. And that's probably, if you're anywhere near right, why the price is where it is today. Yeah. But if you can see out 2 years and you can see that it's going to blah, then you can position yourself for that. Because in a year, it will be where it's going to be in 2 years. Does that make sense? So now is this time, February 2027, which was heading towards an invasion of Taiwan in April, May 2027, because that's when she said, do it. Okay. And then all of a sudden, the PLA seems to have said, no, no, we're not keen on that. And he's gone, I don't like you. I'm going to sack the big generals. So they sacked the generals. And then the rest of the generals said, no, we still don't like that. We're not
Mm,
sure you should have sacked those generals. We're not going to condemn them in a hurry, which means basically no invasion next April. Now, it might be a year out. It might be a year out from that, right? So that's the sort of calculation you have to make because the market is looking to gold's been running because of was going to be happening in March, April 2027 with Taiwan. Well, that game's changed. Now, probably when it came
mm.
down like a rock was because the sort of people that get to know it way before we did.
Interesting, interesting. And where are you looking to invest today, next week, next month?
Well, look, I have this habit of really annoying people. And I go, this is really, really cheap. And they go, oh, that's rubbish. That is what you're talking about. No, that never go up. And then it explodes. And then at the top, it was, it's great, it's great. It's going to go to the moon. I said, oh, no. Oh, goodbye. Oh, no. I sold my silver. They was, oh, wait, what you doing? Selling your silver at 105 and 110. What you doing? Now it's 75. Oh, you were right.
Mhm.
Oh, I'm trying to listen to you. Yeah. So silver for me could go to 50, could stay here. Who knows, right? It's driven by gold. Silver is the fast horse. In a way, silver tells you what can and what is possible, highly possible to happen to gold. Because gold does its thing. Everybody goes, I need to get into gold. That's kind of expensive. I don't get much for my money. Not that that matters, but that's not how people think. I can buy silver
Sure.
dip. I love that. So they go into silver, and silver goes berserk because retail is a juggernaut. So it makes silver go through the roof, and then as always, it pulls back. So that pullback, in a sense, may be advance warning of what happens to gold. But I think gold is where it is, and it doesn't look like it's going to go on another run. If anything, it will just grind on up, and I think that's highly likely, but that's a slow build. So I've kind of lost interest now, literally in the last few days, of gold. I'm going, what I do love is copper. Copper's going to go
Yes.
absolutely berserk. Yeah.
Yes.
And it hasn't yet. So look at silver and overlay that over copper and say it could
Right.
do
Copper's barely moved. It's
all
not
time
keeping
high,
up.
all time high.
Yeah, well, yeah, sure. Yes, yes. But in
Yeah.
ratio, right? In
Yeah.
ratio, it's not keeping up with the silver and the gold yet.
Hasn't done it. And if you look back to when I was a little kid on that little earphone, Yeah. They all did it. They all do it. Every single one of them does it. Yeah. But copper has as I read what copper is all about, it's absolutely critical to AI, and that's going to boil the oceans. And it's very, 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 very important in motors. And if you watch a load of Chinese kung fu robots, you can't replace those motors with aluminium motors. There has to be copper. Yeah, because it is the. I mean, you probably could make them out of silver if you had enough money, but it will be copper in those robots as they come to
Right.
from John Connor. Yeah, and so the demand for copper is just everywhere you look, and so it will go on a big run, and then somewhere out from that will be oil in general. Oil, energy is going to be a big thing. Anything to do with energy, that's the final destination. So there's like a menu. It's like it was gold, it was silver, it is platinum and palladium, then it's copper, then it's oil, and that is the play in 5 or 6 acts. Yeah, and the copper act that episode is coming, and the oil
Right.
episode is coming. Yeah. And there's, sub themes in there. So I'm sort of, that was great. That was so great. Silver gold. I love you. And before it, Bitcoin, I used to love Bitcoin until I got fed up with it. And, I'm not looking for anything good from Bitcoin almost forever until something big changes. And I look at it and I go, oh, look at that. That's going to do that. Wow. Someone comes along and Bitcoin is for the fountain of eternal youth or whatever, then, I'll re-engage, I'll get interested in it again. If gold starts to grind away on up, grind, and silver reconnects with it, because normally they trade together. You just put the charts together, gold and silver, you'll see they're kind of doing the same thing. And then suddenly silver and gold and the gap open right up. And that gap's going to close.
Mm.
It's going to close. It's going to sync up again. Then silver will get interesting, because if gold carries on grinding up, people go, "Oh, gold's 6,200." And so what? If you sell at 5, and then suddenly, need to buy some gold. It's going to go. Oh, I don't get much more money. Silver, bang, up it'll go again. But that is not investing.
Mm.
That is not investing. That's trading. Yeah.
Right.
And if you trade, unless you've had a lot of practice at it, you will lose. You'll lose. It's a very simple mechanic, right? If you the optimum return that you can get playing a skill game in the long term is about 25%, give or take. It can be a bit, but let's call it 25%. The moment you try to go beyond that, it can work for you, but one day it will rip your face off. And that's what happens to traders, right? They go, I'm a genius, I'm a genius, I'm a genius. I lost it all. Yeah. And you'll see it time and time again. Yeah. Up like a rocket, down like a rock. That's what trading's like. And unless you know exactly what you're doing, you've been doing it for a long time and you've got the constitution. I don't have the constitution for it anymore. I used to do it, make good money. I burnt my stomach lining off. That was it. Just, I'd be crunching away on anti-acid tablets like they were cookies. To do trading, bad for your health, it's bad for your mental health, and you lose money. It's actually dead easy. Yeah. And just takes longer. Well, at least you make money. At least you get to keep it, right? So,
I can attest to this. Over the last 6, 7 years, I spent too much time trying to trade crypto instead of just grinding at a job and putting money into crypto, investing, right? And could have just read Bitcoin higher and higher and made more money without the trading and without waking up and checking the price right away. So I'm right there with you. It
well,
just took
that's
me
my
a
rule, by the
it
way.
took me a headache to get there.
One of my rules is I'm actually going to write a book. I've written dozens of books, but I'm going to write, which is of my rules, just to be egotistical and big-headed about it. But one of them is if you have to wake up at 3 a.m. in the morning to check the price, sell.
Yeah, I wish I would have met you 5 years ago. But I want to circle back here. You talked about silver following gold and then reconnecting and coupling and decoupling. For the last, I don't know, I was going to say 100 years, but longer than that, thousands of years, gold and silver have been precious metals. And I think the financial markets are still treating them like precious metals. But silver is more and more becoming an industrial metal. You need it in all of your computers, your connectors, your solar panels. And if you're building a new power station, yes, all the wires are in copper because it's much, much cheaper, but all of your sensors and connectors need to be in silver. They don't oxidize and they're more efficient and they handle the heat better.
Your connectors are
So
gold.
some of them, yeah. I think silver, anyway, we won't get into the chemistry of it all. But do you think that silver should be treated more like an industrial metal now? And therefore stop coupling its price to gold?
Well, okay. I First of all, that coupling is kind of weak. Yeah. They make 3,200 tons of gold a year, which is actually, if you want to think about it, gold inflation. And that inflates about 1.5% a year overall of what was meant to be out there. But actually, in free float terms, it's actually quite a lot more than that. It's probably about 3%. Yeah. Silver. And, if you want a bullish story, this is it: 3,200 tons of gold, 25,000 tons of silver. That's 8 times. Silver is not an eighth of the price of gold. So that you could think of as particularly bullish.
And silver is being consumed.
Yeah, yeah, gold isn't. And
Sorry, we're missing a section here. Now we're talking about palladium.
the world that makes it: Russia, South Africa, and Canada. I think there might be a little bit in America somewhere, but that's the three places, 200 tons. So when you look at gold, 3,200 tons, and and platinum and palladium only 200 tons, so not even 10%, yeah, or 7%. So it should actually be 14 times the price of gold, isn't even 1 to 1.
Mm.
And if it does go 1 to 1, that's like a double right there, even if gold doesn't go anywhere. And platinum and palladium is cheap because the internal combustion engine was going to go away. So no more cat converters blowing it out the back onto the freeway. But that's not going to be the case anymore now, is it, boys and girls? That's going to be the opposite. The internal combustion engine is going to be back in fashion. It's going to be back in fashion. You can even see it in the propaganda that's being pushed out about electric cars right now. Whereas once upon a time, hey, we're great. They were faster. They were better. They were lighter, more powerful, more sexy. Yeah, yeah, yeah. Now it's, they don't run so well in the cold. Oh, nobody likes them. They catch on fire. Oh, they crash. They drive into ditches. Oh, no, you don't want one of them. Funny that. Funny how the stories change.
You
Funny
think
that
that's
Clem
because
and
they're
Ford don't
diverting
want to
the
make them.
resources? Sorry, you think that's because they're diverting the resources to AI now and they don't want to push it towards electric vehicles?
Absolutely.
Wow.
Totally, totally. There's not enough energy for AI. If you come second place in AI, what's going to happen to you?
Okay. Yeah. Yeah. No country wants to fall behind. Nope.
Well, they already have. Europe's so
Hmm.
far behind, it's painful. Britain wants to ban it, yeah, and America can't get enough energy to do it. I can't remember how much megawatts is being produced by China now, but it's at least double.
Yeah, they're building 8 times faster than us. All their coal plants, nuclear plants, everything. Yep.
And now they've got
Yeah.
dancing kung fu robots.
That's the theme of today's show, huh? The dancing robots.
Yeah,
But
well,
anyway,
when you think Tesla
yeah.
is so valuable because it's got electric cars. Oh, that's not so good. But it's going to be robots now. Well,
Hmm.
can their robots do kung fu? Do they have a 12-foot one? Do they have a 12-foot robot? Don't think
I
so.
don't think so. Not yet. That's an interesting topic.
Not the best along in the world, Tesla right now. And yeah, I won't even go there. But
Mm,
good luck, Elon.
interesting. Anyway, I want to start to wrap this up. Please tell us how people should get in touch with you. I know you did at the beginning, but also what do you have for them if they want to get involved more? Do you have a newsletter, a package? I know you have your YouTube channel. How can they interact with you in the best ways?
So there's basically two ways to do it. You can follow me on X, but I just do that. I just say hello. It's not really that totally meaningful. But you know where I'm doing my stuff, and that is Clem Chambers Alpha on YouTube. And I just rant like I'm ranting now. And as things change, so my story changes. I don't go, you got to buy gold, you got to go. It's going to go, oh, it's going to 5,000. It's going to go 8 now. Oh, it's going to go to 12 now. It's going to be, I flip flop as the market flip flips. And I try to
Mm.
buy at the bottom and sell at the top. Okay, that's the trick. Not buy at the top and sell at the bottom like most people suffer. Yeah. So I talk about what is happening and what I'm doing, not because I'm tipping anything, although you'll know what I'm buying because I'll tell you, it's how I am thinking. why I'm thinking what I'm thinking, what the thought process is, what the ideas are below the actual holdings, how to get in and out, and why you should get in and out, and where you should get in and out when. The thought process. That's Clem Chambers Alpha on Substack and Clem Chambers Alpha on YouTube. And they're the two places. And, the YouTube's, anyway, that's where you'll find me. And I've written for Wired magazine and I wrote a whole section for them. And I've written for Forbes for 25 years. And this is like that, but in a much more accessible way. And what I'm trying to speak to is to people that are not professionals and that are wanting to kind of get a grounding in what they should be doing, because so many people get onto a theme, make a load of money, and then lose it all. And it's more about making a load of money and getting to keep it. And there's not just the buying, there's the selling. And if you go out there and look at the media, it's either don't buy anything, it's all over, it's the end of the world, and it's all scary and terrible, and oh no, keep clear. Or it's buy, never sell, buy. So I'm a bit novel that I go, hey, this is looking really good and this is why, but you need to think about it. And then, it's going up. Oh, time to get out. And, shock horror. Everyone goes, oh no, why are you selling now? Oh, it's gone down. Oh, blimey. And you can check my record going back 25 years on Forbes. So you can see that I've not been often wrong, which is a good trick, which is why I live in Monaco and have a castle.
That's fantastic. And we'll make sure to put those links in the description below. Thank you so much for coming on the show, Clem.
It's great to be on. And if you ever need me again, just give me a shout.
Will do. Well, thank you. You've been listening to the Time Compass Show with Bud Leiser. I hope our compass has shown you a better way forward. Now, if you've enjoyed this episode, I dare you not to like and not to subscribe. And I definitely double dare you not to share this episode with 2 of your friends who you know that would love this show. Thank you so much for listening. Until next time, cheers.